Good evening. I'm Epstein with your SPDR-ETF stock market wrap-up, and this wrap-up is for the evening of Wednesday, and we're at the 28th of February, 2024, and wow, interesting times. We're coming to the end of earnings season, so now you're getting the last stragglers coming in, and boy, it's creating wild moves to the upside and the downside. I mean, it's either 10-20% up or 10-20% down. We're seeing that all over the board, and it's an interesting time. We have a lot of data coming out tomorrow. So you've got the U.S. personal income spending and the PCE index. That's going to be one of the Fed's favorite numbers. That comes out at 7:30. Then we're going to get jobless claims. Are they going to stay strong? Are they going to start showing some weakness? That's what we're all wondering. At 8:45 a.m. Central Time, we will get the Chicago PMI numbers. The National Association of Realtors, their January pending home sales comes out at 9. We get the KC Fed Manufacturing Composite and Business Activity Index at 10. And at 9:30, we will get the IEA numbers on natural gas storage. So, do you have your hands full? You can count on it. This is the number everybody's looking at. The question is, what does a surprise up or down do to the market? Because the market has become sort of complacent right here. One of the things, if you were one of my morning subscribers or if you're getting my evening updates, I have also been saying, I thought the markets were going to go into a consolidation phase. During that, what would happen is the 6 megatech stocks that have carried the market basically higher would start going sideways, and you're seeing that. NVIDIA's down $10 while Tesla's here. Remember, this is a stock that's now 200, not where it used to be. Apple sort of hanging in there, not going one way or the other, back and forth. So you've got an interesting time, and that means there's a broadening out into the other indices. Individual stocks, well, it's all about their individual earnings. But as a whole, the industrials took off. We know XLV took off to the upside. You're getting some profit taking there. You're still getting a little profit taking in Amazon off of it, replacing Walgreens this week in the Dow Jones. Schwab has been coming up. I remember this was recently under 60, so it's had a nice move back to the upside. And Netflix at $600 sort of sitting here trying to take it all in. And even, as I said, XLV, which has been up nice in near 148 recently, backing off a little bit. So there's some profit taking. Okay, you would expect that along the way. Now, Baidu saw its earnings come in. You can see just what happened today. Kaboom, that came in late in the day, and away you go to the downside. So all this good work that the market did, taken out with one earnings report. And if we take a look at it prior to today, and I think that's always important to do, your swing line wouldn't be there, it would have been there. But you had your move up. I just want to make my point, and you'll see where this market went to because it's always important. The first challenge of a 100-day moving average or a 200 is often, not every time, but often it's an important number. Just think about it. It's a third of a year. All right. And there's a lot of data that are in there. I'm not talking business days. I'm talking calendar days in that. And it's important. All right, there's 265, business days to a year, so it's just under half of that. And the market went there, fought a battle, but there's another number. It was combined with the Bollinger Band. And often that's the combination I look for. I look for where I see a Bollinger Band resistance point. Why? Markets only trade above or below a Bollinger Band 5% of the time total. Number two, you put it with a major moving average that you haven't hit for a very long period. You got to come back here to basically September. And that first areas were probably pros were taking something off the table. I don't think they knew or didn't know if the earnings were going to be bad, but they turned out to be bad. So that puts in play getting back to the 101 level, 197, and you could see how momentum came down. In addition, momentum never embedded. I talk about that a lot when it locks in. It didn't lock in. It just got overbought near the 80 level, and the market let go. So now it's got to rebuild itself. And I'm happy because I don't have to cover it anymore. Now I can start looking for the next market to cover instead of this. Write me. You're watching this. Which one would you like me to cover in place of Baidu? I'll be looking in the morning to see which one I pick to replace that. I promised a friend I would cover that for him, so I made myself good on that. In Lyft, I just wouldn't be surprised if you want to go back to the 1488 level to regroup. It doesn't have to. It's left its uptrend. It's not in a downtrend. It's drifting. And I think you can see that very clear. You had that one spike when the market, do you remember when they added an extra digit on their earnings, or it was one of those type numbers, and the market came down? They claim it was just a clerical error. I've never heard more about it one way or the other, but some people got really hurt on that. I'm sure down the road we will hear something from the SEC about that. When you look at gasoline, I like gasoline longer term. I mean, we're going to have the spring, summer. Today, let me give you an idea of the Midwest weather. For the past, not today, for the past 2 days, we were 71 to 74 degrees in Chicago, February 26th and 27th. That is hard to believe. Today, we're 23 degrees. Sunday, we'll be back at 70 and then dropping off again. So we're at the season changes already, but this is again one of these winters that has been strange, climate change, and it's not as severe. I grew up in Chicago, so I know the weather in the Midwest. I know it well. I mean, look at my hair. I've been here a long time. And yes, I've lived on the West Coast and I've lived on the East Coast, had at least another home there. And it's different here now. It's not the harsh, hard snow that you're used to in Chicago. You really don't get that in the city. The suburbs are a different world, but the lake keeps the city very different. Well, I mention that all because America has been getting warmer. We see that with the climate change. And now that we're pulling back in here, it's a question of where the spring demand comes in. I'm of the opinion we will have a lot of driving this year, a lot of travel that's going to be by cars. Airfares are a fortune. So I look for that to be a common way. And I'm looking for a situation. Do I see it on the chart yet? No. I see more sideways action, but I know what I'm thinking in my head. When I look at XLF, the financial services, they're still on an absolute tear. Now, they keep going to the Bollinger Band, they're backing off, they go up, they back off. When and if the red line closes under 79 is when I think you'll get more of a correction to wherever the 18-day average is. Until that occurs, I think shallow breaks are being bought by the pros, and they're pitching parts of their position against that band, since 5% of the time the market only closes over it. When you look at the industrial sector, it's very similar. So these two markets have that embedded reading, and it just keeps me very much in the bull camp. I'll share with you, I've told traders I want to see tomorrow's reports before I put on new positions. Now, in after hours, you're looking at $4.99 at AMC. That's not after hours. The stock dropped to $4.24. Where's the 18-day average? Right here, and it's $4.57 right now. My guess is that this market's going to try to hold this as the movie Dune comes out, and when it comes out, the question is it going to be good? The earnings beat for the quarter, and the reason it did is Beyonce, Taylor Swift's parts. But the movies that have come out for all of January and February, they're pretty much duds. So I can't imagine that the first quarter of this year earnings are going to be stellar unless Dune makes up all that money. I don't know. And we'll see. The release is March 1st, so we'll find out if that does it. But I'm guessing that the market's trying to find its footing right there. It was overbought. It's getting a chance to get rid of that. In RSPD, the only reason I know so much about that is I owned the movie theater. I was the main investor, put the group together, and I'll share with you, it didn't work, okay? But I learned a heck of a lot. Every investment one makes does not work. I stepped out of my element. You can see where the market is right here. It's not embedded. You're up at a resistance point. Will the consumer pull back? Are we going to see PCE do anything to this? This is a market that'll be directly impacted by tomorrow's readings. I'd like to see what it is before that occurs. Everything is bullish about the market right now when I talk about our SPD and when I talk about XHB. The home builders still look good to me. They're still buying down mortgages. Mortgage rates are over 7%. But there's that demand. You're coming into the spring. It's like gasoline. I mean, if you want to bet gasoline goes down in the spring and summer, the early parts of them, best to you. Okay, seasonally speaking, you're swimming against the current. And I don't want to swim against the current, nor do I want to bet against home builders in the spring and summer when there's just not a lot of homes. There's articles now in the paper. Are there going to be starter homes ever again? That's a great question. I mean, the prices are so expensive. Where do the younger people get the money unless their parents give it to them for a down payment, let alone meeting the payments? It is expensive. And you can see that all of a sudden we're starting to get a little bit of a reversal. You've got the embedded reading. The first break, if it breaks a bit further off tomorrow's reports, probably gets bought. And then if the red line closes under 79, I think the traders dump the position. But I'm looking, tomorrow's going to be an important day off that number. When we look at the energy sector, you can see you're starting to roll down in the momentum. Now, here's what I'm hearing. I had my ear today to the ground listening, and from what I heard from the Hamas leader, he did a TV broadcast. It was interesting he did a TV broadcast. I don't think the people of Gaza on the run have TVs with them. It must have been for the Arab countries, and it does not sound as though they're ready to accept a peace deal. As much as in the West, our papers say this is going to happen, I mean, if you listened to what he said, and I saw it, it doesn't look to me like there's a deal on this table. He's actually telling people to go up and go to Jerusalem, to the holy places during Ramadan, and he's trying to set off another problem. And if you think that's peace, okay. I think that's why energy's backing off. It doesn't know what to do. Even if there is a truce, will it last? Number one. Number two, what happens in the Red Sea? Do the Houthis pay attention to it, all right? Or do they keep firing at ships? Now there's word that some of the ships or some of the things may cut cables under the Red Sea. What'll that do to communications? I mean, there's all kinds of problems there. When you look at the gold market, from my perspective, I'm bullish, but it's too overbought, I think, to deploy new money at it. In silver, you're still very much in a downtrend. To negate it, you got to get over 2074. The potential is still to get to the lower Bollinger Band at 2014. Copper's done the pullback that I wanted. Remember, we were up here and I said, be careful. I said the first week back from lunar holiday, the traders were probably buying, and now the market has to prove itself. Well, it's back to a neutral stance. I see support between 35.49, 35.26, but if you close under 35.26, that sets up a bearish stance in the market. You might be going to the lower Bollinger Band. Tomorrow's going to be an important day. BND. Why go into tomorrow's report in this or TLT? You're at the mercy of whatever the movements become right off of it. Could be pretty wild. In the dollar index, you're just fighting a battle for now a whole week. At the 18-day average, you're oversold. Is the market going to be able to get bullish or bearish over this? If it takes out 27.97, it probably says you want to challenge the lower Bollinger Band. Take out 28.08, you come to this top. But look at how narrow this has gotten. It's a very difficult market to trade right there. FXE is a bit easier, but it's overbought. Support comes in 99.76 to 99.63. So there's a lot to look at. Tomorrow's going to be an exciting day. At 7:30 in the morning, you want to be geared up and ready to look at these markets. At 5 in the morning, I'm going to put out my futures update. At 9 in the morning, I'll be recording my SPDR ETF stock video. I'll be giving, because by 9, we've already seen so many of these reports, we'll have an idea what should be done. I'll be putting out specific buy here, sell there, do that. Here's what I'm seeing going on. And I use the charts to do this. Now, I use daily and weekly charts in each of these videos. Mostly the daily. The charts will look just like this. They'll have my Bollinger Bands, they'll have key moving averages on it, and my momentum index, all right? I teach as it goes on. And what my idea here is, you have a question, I'm thinking you do, saying to yourself, do I want to get into that market, don't I? Well, that's the whole thing. Walking you through what I'm seeing, why I'm seeing it where it is, and giving you that technical analysis, talking some fundamentals, points of entry, exit, profit objectives, and of course, got to have stop orders. Where am I wrong in this market? Where's momentum coming out of the market? I cover this whole array in the futures, and I cover a similar array over 40 charts in each of the videos. The videos are about 15 to 18 minutes long, and at the bottom of them, there'll be an area. I let that go too fast, but you move your cursor and it tells you what area you're in on the video, so you don't have to jump around if you're looking to do something in a specific zone. So it's going to break everything down into those categories for you. How do you find out more and get in this? It's real simple. Just go to iRapstein.com under the word research. Make sense? You can also click right up here. It'll take you right to that area. With that, I'm Ira Epstein. You have yourself a great evening. Watch the other videos, and I'll catch up with you first thing in the morning as we talk about these important reports. See you in the morning.